Greetings, everybody. Welcome to the Liberty Call. Today is Tuesday, April 4th, 2023. Hope everybody's having a fantastical day out there. Pretty busy day in the world. I mean, outside of finance, everyone's all jacked up about Trump getting indicted or arraigned or whatever the hell's going on there in New York. But looks like the stock market didn't really appreciate it too much, but more of that probably had to do with the employment reports or labor surveys and stuff that came out today. They did not do very well, and I got an article that'll cover that. So we'll get into that in just a little bit. So if it's your first time watching Liberty Call, please give me some thumbs up, like, share, subscribe. I greatly appreciate it. And I had to restart this because earlier I was talking, and for some reason my I was looking outside and it was really bright because of the snow has come in today. We had beautiful day over the week, or beautiful days over the weekend. It was in the 50s and 60s. Today it's like 24 degrees outside. And when you stare at bright snow covered outside, it messes up my vision. So anyways, I had to restart the broadcast. So anyways, if it's your first time watching Liberty Call, please give me some thumbs up, likes, shares, subscribes, follows, all that good stuff. I greatly appreciate it. Let's go ahead and jump into the numbers for today. The Dow Jones was down 0.59%, closed at 33,402. S&P 500 down 0.58, closed at 4,100. NASDAQ down 0.52, closed at 12,126. The VIX was up 2.32% today, closed at 1898. Canada was flat at down 0.01, Brazil up 0.37, Mexico up 0.62. Jumping across the Atlantic, Germany was up 0.14, UK was down 0.5%, France was flat at down 0.01, Netherlands down 0.01 also. Let's see here, Spain down 0.28, Italy down 0.56, Switzerland down 0.18. Portugal down 0.32. Both Russian exchanges were split today. The MOEX up 0.29, RTSI down 0.54. And the Asian markets mostly green. The Nikkei was up 0.35, Australia up 0.18, New Zealand up 0.6, the Shanghai up 0.49, at the Shenzhen component down 0.25%, China 50 up 0.19, DJ Shanghai up 0.35, Hang Seng down 0.66, and the Taiwan weighted was up 0.12. All right, so that's everything in the major indexes across the world for today. Let's go ahead and jump into today's market recap. S&P 500 off lows, but remains under pressure as financials and industrials weigh. All right, let's get my notes up here. Let's see if I can get through this without, mumbling over myself. All right. On Wednesday, the S&P 500 experienced a decline in industrials and financials, although it moved off its session lows. The slump in these sectors occurred due to worries about the banking turmoil, as banking CEOs warned that the impact of the turmoil in the sector would reverberate for years. Additionally, concerns about the economy intensified as the Labor Department's latest job openings and labor turnover survey showed job openings in March fell to about 9.9 million, missing expectations of 10.4 million. Regional banks, including Zion, First Republic, and Comerica, led the sell-off in financials. JP Morgan's chief executive warned that the banking crisis was far from over. The banking turmoil in regional banks, which account for about 70% of commercial real estate loans, leads to reduced lending activity. As a result, companies like Caterpillar and United Rentals, Inc. Experienced a decline in industrials, with Bayer downgrading both stocks to underperform. Boeing Company, a major Dow component, fell 1% after North Coast Research downgraded the company to sell from neutral on worries that engine maker CFM International would not be able to deliver enough engines to the aircraft maker, curtailing its growth. The energy sector gave up its gains from the day before as oil prices fell and investors' focus shifted to the impact of the slowing global economy on crude demand. Virgin Orbit holdings fell 30% after the satellite launch company filed for Chapter 11 bankruptcy protection. The company recently announced that it would cut the bulk of its staff as it failed to secure funding. Overall, the S&P 500 remained under pressure as concerns about the economy intensified, and the impact of the banking turmoil continued to affect the financial sector. The decline in industrials and energy also contributed to the overall negative sentiment in the market. Insane. Alrighty. Next up, article has to do with the labor data that came out today. Labor market finally cracks. Job openings, hires crashed to lowest since May of 2021. Miss every estimate. All right, let's see what they have to say. The U.S. Bureau of Labor Statistics recently reported that job openings in February of 23 dropped to 9.931 million, below expectations and the first sub 10 million print since May of 21. The decline was particularly sharp given that the January job openings number was revised downward to 10.563 million from 10.824 million, so about 300,000 less. The combined 2-month drop of 1.3 million jobs openings was the second highest on record, exceeded only by the economic shutdown during the COVID-19 pandemic. The largest decreases in job openings occurred in professional and business services, healthcare and social assistance, and transportation, warehousing, and utilities. However, job openings increased in construction and in arts, entertainment, and recreation. The number of hires also plunged, dropping by 164,000 in February to 6.163 million, the lowest since May of 21. The drop in job openings means that there are now 3.995 million more jobs than unemployed workers, down from last month's 5.13 million. In other words, there were just 1.67 job openings for every unemployed worker, down from 1.86 last month. While this number still has a way to drop to revert to its pre-pandemic levels, the trend is now clearly lower. The BLS reported that small establishments like 1 to 9 employments saw little change in their job opening rates, hire rates, and total separation rate, but the layoffs and discharges rate decreased. Establishments with more than 5,000 workers saw little change in their hire rates and total separations rates, while job openings rates decreased. There was a moderate silver lining in the number of quits, which, after dropping to two straight months, rose by 146,000 to 4.024 million from 3.878 million. This indicator reflects confidence in finding a better paying job elsewhere. However, real numbers in job openings remain lower, as more than 2/3 or 70% of the final number of job openings is estimated. While BLS admits that the response rate to most of its labor surveys has collapsed in recent months, nothing is as bad as the JOLTS report, where the actual response rate has tumbled to a record low of 31%. The drop in job openings, coupled with other economic indicators, suggests that the U.S. economy is careening into a hard landing recession. The trend prompted a decline in the odds of a May rate hike by the U.S. Federal Reserve, which fell back below 50%. The labor market's officially track may also prompt the Fed to follow Canada and Australia and pause its rate hikes in the future. Well, that wouldn't be good if they start lowering interest rates and more QE. That's just going to lead to more problems for us down the road. All right, last article I got here is from Mises Wire. It's titled, "Can Civilization Survive Without Sound Money?" And those of y'all who follow what I talk about on a regular basis know that I complain a lot about the way the banking system is today and not having sound money and all the problems it's led over the last several years. All right, let's dive in. The concept of sound money was first defined by Ludwig von Mises, who stated that it has two aspects: serving a commonly accepted medium of exchange while making it difficult for governments to manipulate it. However, it is not always prevalent in today's world. Governments have monopoly over the production and control over money, which brings civilization to its knees. Nevertheless, the Sound Money Defense League is fighting to bring gold and silver coin back as legal tender at the state level. Although it this is encouraging, they admit that that it is the Federal Reserve, U.S. Treasury, and Congress that have fully embraced fiat money, which is the root of the problem. Furthermore, governments are predators that produce nothing, but instead they use monopoly to sustain and expand themselves. War threatens their existence, and they will use everything to fight it except sound money. The exception to this was the Mexican War from 1846 to 1848, which was the only inflation-free conflict in American history, funded by the newly created independent treasury. During the writs of assistance case of February of 1761, James Otis Jr. argued against the legality of the writs before an audience in Boston's State House. He claimed that every man lived in a state of nature. Every man was his own sovereign, subject to laws engraved by his heart and revealed to him by his maker. This principle of unalterable law takes precedence over the survival of the state. The sovereignty of the individual over the state is the essential concept that was established during this time. However, today's government prioritized national security over the sovereignty of the individual. In conclusion, as long as governments exist, money will never be sound. The movement to bring gold and silver coin back to legal tender is a step in the right direction, but the Federal Reserve and Treasury and Congress must also embrace it. Governments are predators that will use everything except sound money to fight wars. The principle of unalterable law that takes precedence over the survival of the state, it is vital in establishing the sovereignty of the individual over the state. All right, so that's everything I had to say today. That's kind of a dry article. You're welcome to read through the rest of it. It's in the show notes. So that's everything I had to cover for today. I hope everyone has a fantastical evening, and I'll talk to you guys next time. Adios.